Hello? Can you hear me? I thought we only do this in virtual rooms. Even here I have to say, can you hear me? Okay, good morning everyone, and welcome to the inaugural, this is the first time that we are doing this, Financial Services Editorial Forum. This is purely for the media members. My name is Selvi, for those of you who don't know. I lead communications for ASEAN ZK. And of course, I have my wonderful team members here. We are seeing each other for the first time after 2 years, face to face. So it's really nice to have them and all of you. And we are very, very grateful to our esteemed panelists for taking the time to be here to share their experience as well as their perspectives and insights. So let me not take up too much time. I would love to welcome Agnes Hafberger. She is the General Manager and Technology Leader for ASEAN ZK and my boss. What else? So, let's have a great conversation. I stole this from the movie The Last Samurai. So wish everyone a good conversation. Agnes, over to you.
Good morning. Is it still good morning? I think I can still say good morning, everybody. And I'm really, really excited to have the opportunity to open a physical event like this one. So as Selvi already said, this is the inaugural Financial Services Industry Editors Forum, and I'm really pleased to have you all here this morning. I lead a market that Selvi just calls ASEAN CK. It's probably something that doesn't ring familiar to many of you. It's Southeast Asia, Australia, New Zealand, and Korea, and I oversee the IBM business over there. I'd like to introduce you to my bank. That's my bank, right? This is where I do any kind of banking transactions. This is where I do payments. I actually check what we as a household have spent. I send birthday gifts. I sign up to new investments. Actually, I've moved to Singapore a couple of months ago. I have not physically been to a bank yet, but yet I actually have established my banking existence here in Singapore solely through this device here. So that's my bank. And I think that's kind of like the introduction to a quite rapidly transforming industry. If you read a recent study of the Singaporean fintech associations, what are clients looking for? Well, 75% of banking or financial services clients and consumers actually want to have ease of use. That's their priority number one. And as this is my bank, I totally understand what they are after. The pandemic, the last 2.5 years, which make this such a special moment for us that we can get together physically, have just accelerated that usage of technology, but also new ways of interacting with consumers, with clients, and so on. The UN Forum actually estimates that more than 780 million people globally actually went online, so they haven't been online at all before the pandemic, went online through the pandemic and are now using, utilizing, asking for digital services. We also, from an IBM point of view, we do see there is a huge uptake in hybrid cloud, in AI, in automation, in technologies that actually fuel a lot of this digital services that we talk about. We did a recent study also globally with enterprises around the globe of different industries, and we realized that more than 40% of the enterprises say that they already very actively use AI to transform their company. And they use AI 30% of them say that they use AI to actually help their employees do their work a lot more easily and automate processes as they go. So we see new business models and new opportunities emerging. We also see challenges coming along with it. And I'm really, really pleased that we have an exciting panel lined up today that I think is really well equipped to talk about the challenges that specifically in the financial services industry have arisen. So on the one hand, there's a huge opportunity with changing business models. There is an opportunity for traditional banks and fintechs to collaborate. But there is also the challenge that consumers expect quite different things. You have digital natives, and I would probably still call myself, like just by a year, maybe I just am still a digital native and millennial, I expect this to be my bank. But there are traditional banking or financial services clients and users that expect something totally different. So we need to cater to both of them. At the same time, there is regulatory pressure, there are data infrastructures that sometimes are maybe a little bit of a challenge to handle, and there is different emerging players in the ecosystem to work with. So I'm really looking forward to having an exciting conversation, I hope today, by the panel and amongst the panel members. How do we tackle the challenges, and how do we make the financial services industry digital savvy, but in a way that really caters to all different kinds of user expectance, with probably a time at the moment where we have economic headwinds more than we have tailwinds, but also tailwinds from a technological point of view. So thank you to all of you for being here, but also thank you very much to the panelists for being here as well. And with this, I open this event and I hand over to you, Juan. Over to you. Thank you very much.
Thank you very much, Agnes, for this energetic introduction. My name is Juan Madera. I lead IBM's financial services business in ASEAN. Apologies, I speak in Spanglish, so if you need me to repeat, please let me know. I'm happy to do so. So I'm accompanied here by a very interesting panel. We have three representing three companies that actually bring a lot of different angles to innovation into financial services. So I'll go right to left. First of all, Calvin Shen. Calvin is the MD of Hex Trust. So effectively, I'll allow Calvin to explain a little bit better what it is. But Hex Trust is a digital assets fintech. For the lack of a better description, if that's okay, is that a good description?
Sure. That's good. So digital asset custodian. A licensed digital asset custodian, for sure.
Brilliant. Thanks, Kelvin. Then the second on to the right, Bambam Murguato. Bambam is the VP of SAP for financial services in APAC. Right. So SAP is being at the backbone of any digital and technology adoption in banking for the last 30 years, at least since I started my career. And Bambam has been a veteran. We've worked together for years, and it's very interesting to see the perspectives of SAP on what is coming. And to my left, I've got Kuna Malapan. Kuna is the VP of F5 for APAC as well. Kuna works in several industries, not just financial services, so I'm very keen to see your views on how financial services can also collaborate with other industries to bring innovation. And we were talking earlier that financial services and telcos are probably the two main industries from F5, which actually there are two industries that need to work together and collaborate. Okay, so let me start with, I'll have two groups of questions. One is really about waves and trends and what is coming. And the second one is really about ecosystem collaboration. And then perhaps we can open to a few questions that you may have, if that's okay. So I'll start with a question about waves, right? And perhaps I'll start with you, Bambam. Typically banking and technology generate waves of innovation every certain number of years. Probably digital banks or neobanks were one towards 3, 4, 5 years ago started. But then COVID probably has created a very rapid sequence of multiple waves. It's very difficult to follow through. So based on your perspective, what is probably the most significant and impactful wave that you've seen recently? And if you had a crystal ball, what is the next wave that we all have to catch on?
Okay, thank you, Joan. So I wish I could have a crystal ball, but I don't, fortunately. So I'm probably actually sharing from my perspective, right? So I have an opportunity to manage FSI, and also a couple of other industries in SAP. So SAP actually work in 25 different industries. Banking and insurance is 2 out of the 25 industries. And I manage actually other industries which happen to be the financial services and customers, right? So what I've seen actually as the shift, thanks to COVID, right? So it's not just only for the traditional players, but also for fintech, is the shift that is happening actually in the business model of banking, right? So, or even actually the insurance, right? So we all know actually the banking history started actually from the Roman Empire, right? So, and then the modern banking actually in 14th century in Italy, and then the insurance actually started from the London Great Fire, if you remember, right? So 1666. So all these actually have changed because one is actually because of the technology, and the other one is because of the pressure coming from the customers, right? So the traditional business model of banking or insurance have changed because the customer expects more from the bank and insurance company. It's not just only lending, it's not just only taking the deposit, but the customer expect the bank to be an advisor actually to what they're doing, right? So likewise, actually, insurance company, if you're talking about health or general insurance. So the insurance companies should go actually beyond the traditional insurance coverage. They should be also helping actually those customers to be much healthier, right? So I think you must know actually some of the program that is there actually by AIA or Prudential, right? So they do have actually the program which give you points for people actually to stay healthy, right? So this change in the business model also means that the bank is not a physical or a virtual entity where people or the corporate customers actually go to those banks, but it's actually the banks is the one actually who is going after to the customers. So banking actually becoming invincible, becoming a services that is there actually where the customers are, right? So when the customer is, let's say, doing their online commerce, right, trying actually to search for goods and products that they want to purchase, bank is there, right? And then when perhaps actually in the future, the kids, when they do actually play a video game with the metaverse, let's say, the bank is there actually, right? So the bank is no longer a place where customer is reaching out to them, but it's a service actually that they are reaching out actually to the customers.
So you have been mentioning a couple of in keywords. You've been talking about behavioral banking and behavioral financial services. You've spoken about a better health, but also perhaps better financial health as well. And then you've also been talking about ubiquitous banking. So banking being embedded into every activity in a day-to-day. Is that right?
That's correct. Yeah.
Perfect. So perhaps let's shift to Kuna. So all of these trends, as particularly if we think about ubiquitous banking, the bank has to operate everywhere. And everywhere means, regardless of geolocation, regardless of the channel, whether it's the metaverse, whether it's a video game, etc. So that represents a challenge in terms of security, trust, communication, individuals' rights in terms of personal identity data. So how do you see that technology, and particularly players like F5, can help to overcome some of those challenges?
Yeah, sure. Thanks, Kwan, and thanks, Bambang, for setting this up. So I think you're right. Banking has become very ubiquitous, and or at least for me, I've been dealing with banks or talking to banks and the IT departments for a very long time. And I think one of the emerging areas that we see banks invest in is what is increasingly being known as open banking. So it's very much tied into what Bambang talked about, right? Banks want to be present everywhere. And one way for them to be present everywhere is in the adoption of open banking. And this has become one of the biggest initiatives that we are seeing banks adopt. What open banking really means is simply giving the bank the capability to connect with third-party providers, namely fintech. So we are seeing a little bit of cooperation, though it was competition, a bit of cooperation coming up between banks who are opening up and realizing that because of the fact that the customers trust them, therefore the customers will go through them to consume third-party services. So we are seeing collaboration between banks and third-party providers, all kinds of services, right? In fact, a local bank has even tied up with a property website so that they can actually show up loan offers when they shop for property online, and therefore having the loan approved seamlessly. And all of this is done through what we call, in tech terms, we call it the API. In fact, this is sometimes called the API banking, Application Programming Interface. And as prevalence of API banking, open banking becomes more adopted, security issues do turn up. So one of the biggest challenges the banks have to or tackle is how, as I open up my banking platform to third-party providers to come in and access customer data, how do I protect that customer data from going into the wrong hands? So in areas where they are investing in, as we see it from our perspective, is how do I secure APIs that are coming in? How do I manage these APIs sprawl within my banking systems? As I open up my banking system to third-party providers, so API security has become a top of mind for most banks in the region because of the fact that they want banking to be ubiquitous, they want to be present, and they want to partner with third-party fintech providers, aggregators, and they want their customers to have access to these products through them because it opens up a new channel of revenue and they can then monetize that. So API security investments are increasing as we see it from our banks, the banks we talk to, investments in API management within the application teams, and as well as increasingly they are moving to the cloud, but that's another topic altogether.
Thank you. There are many technologies that need to play a part, right? Including cloud, and we'll come back to that. So speaking of fintechs and collaboration, Calvin, you have perhaps a different perspective because you're focusing on introducing new asset classes and new offerings and partnerships with banks and also non-banks to promote those kinds of asset classes and perhaps also to democratize some of the wealth through the promotion of those asset classes. So how do you see this trend, and how real and how impactful do you think it's going to be to everyone in society over the next few years?
Absolutely, and thanks, Juan, for moderating. So what we're witnessing right now in this environment is actually one of the greatest wealth transfer to the younger generation who tend to be more digitally native, right? So as Agnes was saying, they would prefer a banking in the phone. They prefer technology. They prefer doing things the efficient way, seamlessly. And so part of that, wave, in the industry that Hex Trust is in is providing the back-end infrastructure for banks and other large traditional financial institutions to get into digital assets. Now, digital assets, you can think Bitcoin as absolutely one of them, but you can also think about the latest buzzword like NFT, non-fungible tokens. It was mentioned metaverse. You have virtual land. You have, these pictures that could be worth millions upon millions of dollars. I mean, what is that? It's really just building on the top of the blockchain technology. And how the banks are now, thinking about the space, which is drastically different than, back in 2008 when, after the financial crisis, is that at this point, the banks are actually willing to and believe in the blockchain technology and would love to get into the digital asset space. That part, based on my many conversations with banks globally, to me, I'm very certain about the progression. Now, every bank is different. They have their ways of doing things. Some might be faster, some might be slower. But the trend line is that it's absolutely going to embracing digital assets. Okay. Then becomes the problem is, how do you support that? right? For a bank to offer a deposit account, maybe to offer brokerage services, to access stocks and bonds, it's something that's been done for decades, right? Nothing new. However, when it comes to digital asset, this is a completely new ballgame. There's no existing infrastructure. And so that's why Hex Trust, we do custody of Bitcoin, custody of digital asset. What does that mean, right? It really, at a very high level, means secure private key management. Private key, you can think about it as kind of a password to access your mobile wallet that holds your Bitcoin or whatever balance is. So every single financial institutions and banks have to, if they want to offer the services based on their high net worth individual, based on investment banking clients, corporate banking clients, they would have to adopt and build this technology. So you can either do it themselves in-house, or more likely than what I've seen is to potentially partner with fintech companies such as Hex Trust.
Thank you, Calvin. So we've been talking about a few waves that are colliding with each other, or if you will, collaborating with each other to create perhaps an acceleration of adoption, right? So we've been talking about ubiquitous banking, we've been talking about behavioral banking, we've been talking about cloud adoption, digital assets. I wanted to ask you perhaps about one trend that I believe is very, very impactful, particularly to young people, right? Which is really sustainability. And what is the role that banking has in sustainability, and what do they play? What is the part that they play, and you know, how do you see that you know, becoming real over the next couple of years beyond ESG reporting, which is perhaps the focus over you know over the last couple of years? Is it going to be a real push of in financial services to allow to enable and disburse money for tangible and large, impactful, sustainable banking projects?
Me? Okay. Thanks. Okay, so we have a privilege, actually, all of us live in ASEAN, right? So Southeast Asia. So you might probably know, actually, Generation Y, Generation Z, right? So, you know, Generation Y is from 25 to 40.
I won't disclose. I won't disclose which generation I am.
As well. And then Generation Z is actually from 9 to 24. Perhaps actually many of you in this room actually belong to that generation, right? So there's actually an interesting survey that we did, actually says actually that 83% of this generation would prefer to stay or retain actually with one company as long as that company actually have a purpose-driven agenda on ESG. All of you know actually what the ESG is all about, right? So economic, social, and governance, right? So bank actually has a very interesting roles as an exemplar, but also as an enabler, right? Especially we are sitting actually in ASEAN, where it's a young territory on itself, right? So, and it's also a very interesting place whereby if you look at actually the energy source of ASEAN today is still very much actually relying on the fossil, right? So on the, you know, solar, on the, you know, coal, right? So it's basically you have to dig something from the ground. But a lot of people actually neglected that ASEAN is also a source of geothermal, which is actually the heat from underground, right? Which is actually the green energy, right? So I believe the bank in Southeast Asia will play a very prominent role in green finance, beyond just only doing the reporting, because sustainability will become actually something, a risk that bank actually has to embrace as part of your origination processes, as part of the way how you try to measure the performance of the team, right? So to quantify how much is the price, the loan price actually that you want to charge to a certain company, right? So because it's becoming a risk, and there's a survey actually which call out actually sustainability as one of the risks that many banks actually will be talking about and seriously need to tackle. So this has to be managed beyond just only reporting, right? So I remember in my old days, because I started actually my career as a market risk with JP Morgan. so back then, actually, when we introduced value at risk to the dealer in JP Morgan, nobody actually wants to, embrace that, right? So they said actually why we should actually be compensated not just only based on the revenue, but also by the risk that we take, right? But risk is beyond just only reporting, right? So it's actually part of the business that the bank and any other financial institution needs to manage. Bank is about actually managing risk, right? So sustainability once become risk, then this is something actually which is going to be prominent actually for our bank and insurance companies.
Very good point. Very good point. And Calvin, one of the key aspects of ESG is financial inclusion. We live in ASEAN, 700 million people. Lots of opportunity for helping the unbanked and for financial inclusion in general. Digital assets represent a new opportunity. What is your perspective?
Yeah, absolutely. And I think this is a very important topic that when people think about digital asset, it's usually, Bitcoin, it's volatile, you can make money or you lose a lot of money, right? Usually the rhetoric stuck there. However, when it comes to financial inclusion, which is, we're in Southeast Asia, we have one of the most underbanked populations globally in this region, where remittances from workers going, remit their payments, salary back to their home country, tend to have a very high cost, measured in percentage terms, right? Now, how blockchain technology is that it can also have a payment component to it. Payment meaning, faster, cheaper, and more quicker. So instead of, doing things, going to a remittance company, pay, 3 to 5% or more fees right off the top, and then wait for days for the check to clear back in home country, you can actually use blockchain technology and the settlement is near instantaneous for pennies on the dollar, if that. So this technology is now obviously being looked at by many money operator and financial institutions, in around the globe. And I think this is a very good example of how the technology itself can really make a meaningful impact to those that really deserve and really need a more inclusive financial services offerings.
Thank you. I really believe it's real. I think younger generations in developing countries have an opportunity to benefit from the new opportunities in digital assets. All of these trends theoretically have to be underpinned and supported by cloud. Perhaps financial services traditional banks have been shy of adopting public cloud. Because of a number of reasons, security concerns, compliance, regulation, and also a fair amount of legacy infrastructure and applications. And I really believe that we are at the verge of a much acceleration on cloud adoption, or if you will, hybrid cloud as well. Kuna, you must have a perspective on this, because this is critical to the success of F5, the transformation and adoption of cloud or hybrid cloud safely. What is your if you had a crystal ball, what is your views on adoption of cloud in financial services over the next few years?
It's a very good question. In fact, I was smiling as you asked this question, because I think 5-6 years back, I remember being in a kind of a panel and cloud was a topic of discussion. 5-6 years later, cloud is still a topic of discussion. And I think the only thing that's happened in between is the pandemic. So, I think the adoption of cloud by banking and financial services organizations is inevitable due to a couple of reasons. I think cloud offers them the speed and agility that's not possible with their own data center infrastructure. So that's the speed and agility. Second, I think cloud also offers them the ability to scale demand as and when it arises. So I think a lot of banks, and we hear that from a lot of banks that we speak to, have realized when the pandemic set in, they were not quite prepared for the scale of the remote working, the scale of the customer access, online access. So they realized that the only way to scale is through adoption of cloud. And obviously, the third reason why cloud adoption is inevitable is the competition from the fintech. Fintechs are normally, in our industry, we call fintechs born in the cloud companies. They are born in the cloud. They start off in the cloud versus the traditional financial institutions who start off on-prem. So to cope with the competition, banks have to innovate in terms of how they can adopt the cloud to reduce costs, in addition to the other factors I spoke about. Obviously, the challenge for traditional banks in adoption of cloud is the fact that they are highly regulated. They are a highly regulated industry. And therefore, not everything can move to the cloud and at the same speed. So what we are seeing is adoption of cloud is definitely on the uptake, but the type of workloads that move to the cloud is not uniform across the industries. So generally speaking, we see banks do not move regulated applications to the cloud. Core banking, back office, some back office operations are not moved to the cloud. The front end operations are moved to the cloud more easily, like maybe internet banking app, the email productivity software applications are moved to the cloud more readily because they are not as regulated as the core banking applications. So depending on the type of workload, we see banks moving to the cloud certain aspects of their business while maintaining the regulated aspects on-prem. And across countries, we are also seeing a bit of difference. We see countries like Australia, New Zealand, Singapore, Hong Kong move. They are a lot more ready to move to the cloud because there exists a very well-defined regulatory framework in those countries, which have been defined by regulatory authorities in terms of what can move, what cannot move, what are the data privacy considerations you have to be taking into account. Therefore, banks are very well aware that, hey, I can move this work to the cloud, but I need to maintain my security infrastructure on-prem. Whereas in other countries, the emerging countries, I would say, in India or even in China and Japan, we are seeing authorities putting in place, they are coming out with strict regulatory frameworks, and therefore we are starting to see customers talk about the cloud. But what they are now doing is trying to prepare the internal infrastructure to take advantage of the cloud in the near future. So it varies across the region, but everyone is definitely looking at it at different degrees.
So in summary, banks have moved the easiest stuff to the cloud, and they still have a lot of work to do. And so that's a very good summary, Kuna. So just my last question. You spoke about as one of the drivers for cloud adoption is the collaboration between fintechs and established banks, right? Perhaps this is just my last question to Calvin as well, because he is probably the fintechy guy on the table. So Calvin, tell us, give us some clues. How do you make successful collaborations and partnerships with traditional banks, and as well as with the ecosystem in general?
Yeah, absolutely. So certainly when dealing with regulated entities like the banks, right, and you combine that with this nascent asset class called digital asset, it's certainly not easy in the beginning. Let me tell you that, to say the least. Now, what we do at TechTrust is we are really the definition of a fintech company, a financial technology company, right? We build the technology from the ground up internally by our team, because again, blockchain technology is new, there's no existing infrastructure, and therefore we built it ourselves. That's the technology side. The financial side is that we've always been embracing regulations, been doing things the right way, doing things the compliant way. And therefore, we reached out to the relevant regulators for which operate, including here in Singapore, where we actually hold the capital market services licensed and regulated by the MAS. Now, I think that's a big testament for various reasons, including now the regulators themselves are embracing this technology, this type of service. That's one. Secondly is that when dealing with traditional financial institutions like the banks, if you're not licensed and unregulated, chances are you're probably not going to have any type of meaningful partnership. Because from a bank's perspective, yes, technology is very important. And actually, in all fairness, we do partner with IBM as a global business partner of ours. But also, in addition to security, there's also the compliance component. So what are our licensing, what are our AML obligations? How do we make sure that we prevent money laundering via digital assets? So These are some of the things that the banks care about beyond just the technology aspect. And so for us to be successful, we partnering with the banks, not only do we have the best-in-class technology, we better make sure we have the right compliance process in place. We better make sure we have the right operational process in place that are audited by external auditors, being certified, whether it's SOC 1, SOC 2 reporting, and better make sure that we have the relevant operational workflow in case such as segregation of duty, no single point of failure, etc.
So in short, the best way to partner with banks is doing the right way and be compliant and taking care of data of your customers, taking care of the regulatory framework, etc.
That's right. There are no shortcuts when dealing with regular entities.
That's a good message. That's a good message. So with this, if we have time, perhaps we can open the floor for a couple of questions from the audience.
Yeah, go ahead with your question. Yeah. One sec, we are getting, okay. Okay.
Thank you. Test. Okay. Yeah, thank you for the opportunity. I want to ask to Mr. Mulwanto regarding your topics about the sustainability financing. I would like to ask on the increasing call for banks to pass out financing for coal and other brown commodities. Do you see the call is as urgent as today, and also as a part of mitigating the sustainability risk for banks? And also, is there any kind of form to achieve the goal that you mentioned earlier, apart from like facing those financing? And also, I want to ask about the terms about making green assets and also making your liabilities green. Is it possible, and how banks could do it? I have this term from Indonesia's largest bank, BRI, when their CEO spoke at Davos last week. Maybe you could give your opinions on that. And also, on the second question, I want to ask opinions from all panelists regarding these financial services and also trend. Indonesia this year is hosting G20 this year, and also there is some topics about the CBDC, the cross-border payments, and what does the G20 must address regarding this topic, and also what financial industry services could contribute on this matter. That's all my question. Thank you.
Don't mind, could you introduce yourself to the panelists?
Oh, sorry. Yeah, my name is Vincent. I'm working for the Jakarta Post.
Jakarta Post. Okay, thank you.
My countrymen. Okay, so I'll try to address the first question on the sustainability, right? So for a bank actually to focus on green finance, especially here in Southeast Asia, this is my point of view, right? Because we still rely so much actually on the fossil energy, and this is actually the emerging market if we compare actually to the rest of the world, right? So, and with that, of course, to drop everything and then start shifting actually the focus on the green energy will need actually a lot of partnership actually with the government, right? So partnership actually with the business players as well, right? Because the government themselves actually, they also need to see that this is the only earth that we live in, right? So if you keep on relying on the coal, burning actually the forests and all those stuff, it will not be sustainable actually for the future, right? So the government actually should give an incentive for the business players actually to start shifting actually their focus from the fossil energy to the green energy. As what I mentioned earlier, so Southeast Asia, we are fortunate because we have one of the biggest geothermal source of energy, second actually to the US, right? So I think because of the volcano, there are many actually volcanoes in this region, but we haven't capitalized that, right? So only 3% of the energy requirement in Indonesia is funded or fueled actually by geothermal, right? So which is very small, very tiny, right? So of course, this is an opportunity for a financial institution as they need to start looking into this green opportunity financing, right? But at the same time, the government also needs to give a push, right? So to the business that this is the area that they should be looking at in the future, right? So that's, again, I don't really have actually the perfect answer here, but I will see there's a lot of collaboration need to be done between the business players, the government, and also the financial institution in this case, right?
And Vincent, can you repeat the second question?
Regarding the G20 agendas, the finance track about the CBDC and cross-border payments. Yeah, I want to ask about what the forum must address on those two topics and what financial industry services could contribute to that matter.
I'll pass on to my colleagues on the panel. I don't have a lot of detail about what was discussed on the forum, but I think in terms of digital assets, CBDC, Indonesia is a very interesting example. There are 7 million Indonesians that own some kind of digital asset, NFT or whatever. So there is definitely a demand in the market. I don't think the regulatory framework is mature enough to define what is possible, not possible, what is legal, etc., etc. And so there is a lot of opportunity and development that is expected over the next few years. But I don't really have insights on what, for example, OJK or the government of Indonesia is planning to do and what was discussed in the forum. Perhaps.
Yeah, the other panelists, if you could respond to that.
Sure, and I'll just add just some general observation about CBDC, or central bank digital currency, digital cash, depending how you want to look at it. So CBDC, again, is just another, as I was alluding to, right? It's just yet another representation of value using blockchain technology, right? Obviously, the main difference is that this value actually is backed by sovereign, just like your SGD here in Singapore, which I think is a very big difference than obviously your stable coins or your Bitcoin, etc. Now, CBDC actually is absolutely coming, right? PBOC has been piloting this for years, right? The People's Bank of China. There's actually one already live, the Bahamian Sand Dollar, right? There's actually live in production right now as we speak. There's definitely been a lot of study being in MAS, the US Fed's been looking into it, Bank of England, the European Central Bank. So to me, it's not a matter when, or if, or it's just a matter of when, rather. Yep. And again, the fundamental question amongst many things, whether it being legal, legality, being compliance, which is obviously a very big deal with respect to these money transmission, the question will also be on security. Because then this goes back to my earlier topic is, how do you make sure that you can access this, the CBDC, in a secure and efficient manner?
Thank you. Guna, your perspective? No. Okay. Cool. Any other questions from the media? Okay, hi. Introduce yourself.
Hi, good afternoon. I'm Vanessa from The Edge Malaysia. I have two questions here. One is on ESG, and the second one is on digital banks. The one on ESG, I would like to touch a bit on, hold on. Yeah, so the conversation on, ESG best practices so far, have mostly revolved around MNCs, bigger companies, or maybe medium companies. So I'm wondering what kind of role banks can play in order to get the smaller companies on board the sustainability journey? And for the digital banks, does the emergence of digital banks in the region add pressure to conventional banks to embrace technology such as cloud, AI, and etc.?
Do you want to direct your question at anyone, Vanessa?
Any of the panelists.
Anyone?
Yeah.
Okay. Open to all panelists.
Any takers, volunteers?
I can take the second part of the question.
Okay, let's start with the
So
Sure,
I'll start with the second part of the question. So I think, yes, there is a lot of pressure from that the banks, traditional banks, are facing due to the emergence of the neobanks or the fintechs. Or at least I'm hearing this in every meeting that I have with banks in this region. And I think the reason again, right, why they're facing the pressure is the neobanks start on the cloud, and they use all the new technologies, and it's also their cost base is lower because they're only a digital-only bank in most cases. The traditional banks have to deal with a very different demographic choices, right? And therefore, they have to still deal with the branches. They have to still deal with their digital banking infrastructure, which is coming up. But however, the traditional banks are not sitting on the laurels. They are definitely innovating, which is why, as I spoke to the first question, they are heavily investing in what I call as open banking. So rather than seeing the fintech as a competition, they want to try and cooperate with the fintechs. So the local banks know their strength is basically they have the trust of their customers. Like, for example, I will not change my bank just like that because a new bank is coming on. So what the traditional banks are doing, they are evolving their infrastructure to connect with third-party providers. So in a sense, they're saying, look, I've got a license, I've got the banking platform, and I'm opening up my customer base to you if you want to cooperate with me. So what we're seeing and what definitely I'm seeing in banks, at least in Singapore and in the regions, especially Singapore, Malaysia, India to some extent, is their banks are actually tying up with third-party financial aggregation companies, third-party fintech providers to open up their customer base so their customers can actually consume fintech services through, as I said, API connectivity to those new banks. So rather than seeing them as competition, I would say it's more like a cooperation that's happening in the region. And some of the technologies that the banks are adopting includes, like I said, moving to the cloud, some of their applications, making it easier for customers to, or making it easier for the apps to connect with fintech, adopting a lot more AI machine learning so that they can analyze their customer profiles and in fact target the products that fintechs offer to their customers so that their customers can then buy those products through their platform.
I think it's very good points. In addition to that, I think established banks are not particularly threatened by neobanks. They can coexist because most people, particularly in markets like Singapore, will have several bank accounts. The question for neobanks is going to be whether they can be sustainable and profitable in the long term. And that is not always easy because the cost of acquisition for them is quite high, even though the technology cost is lower and operations cost is lower, but cost of acquisition is quite high. So the most successful neobanks are traditionally banks that had a large customer base to start with, and then they evolve into a banking offering later. So, for example, I think technically the most profitable neobank or digital bank in the world is Rakuten in Japan. So effectively, they had a large customer base, they had a digital platform already, and then they created a banking offering on the back of that, right? So I think the challenge is in this part of the world, particularly, is going to be the profitability and sustainability long term. So perhaps let's pivot to your first question, which was really about how banks can enable and support the ESG and sustainability transition of SMEs, right? That was fundamentally the question.
That was the question.
Any thoughts?
I don't want to be called actually as the ESG person in this room, but I have so.
You are very passionate about this.
Well, I do, right? So I have opportunity actually to be the advisor actually to the World Bank SME Finance Forum, right? So as part of my outside SAP job, so ESG actually came up a lot actually in our discussion, and the SME actually has been challenging the bank to play more proactive role. We are fortunate that we are here in Southeast Asia. Our economy is driven primarily by SMEs, right? But many of these SMEs, they don't even have a proper system in place, right? So they run actually on manual book, ledger, Excel spreadsheet, right? So the bank, as what you hear actually today, right? The role of the bank is not just only giving actually the funding to these SME customers. Yes, actually funding is one of the most important element for the SME customers to be able to survive. But they need actually beyond the funding, right? So the bank actually will also need to play the role as an advisor to these SMEs. So there's a couple of organizations, including some banks in Southeast Asia, where they help actually the customers to digitize the way they operate, right? So they embrace some ERP solutions, and SAP actually was one of them. Actually, we were quite fortunate actually to work with a bank here in Singapore as part of the SMEs program. So using actually the logistic and also the ERP solutions, they extend actually this ERP to the SME customers, so they can run actually their business on the logistic and also the ERP. So automating actually the way they run the business. For the bank is also beneficial because once actually they have this SME customers running on the ERP and logistics where they get connected actually to the bank's backend, they will be able to see their inventory, account receivable, right? So then the bank actually can provide value-added services to these SME customers proactively as well. So it's a win-win situation.
Thank you very much. We have a question from this table.
Hi, good morning. I'm Doris Dumlo from Philippine Daily Inquirer. Mr. Kuna earlier mentioned about how clear-cut regulatory framework in other countries like Singapore and Hong Kong, how it's driving the adoption of cloud. My question is for the rest of you, and maybe we could talk a bit more about other countries in Southeast Asia. How would you assess the capability and appetite of regulators to welcome disruptions, technology, open finance, AI, etc., specifically for the other countries not mentioned before, which already have a more advanced regulatory framework?
It's a difficult question, Kuna.
Well, I do not have a specific answer for that. So sorry, but because I'm not very familiar with all the countries in the region, but I can definitely say that at least in the ASEAN countries, open banking is definitely looked at. It's not a law in all the countries. Like in Australia, there's actually a law that stipulates open banking framework. And in Singapore, MAS has specific guidelines around technology adoption in the cloud adoption in the financial services industry. Other countries other customers that we've spoken to, other countries are definitely looking at it, and I don't think there's a formal framework that exists in most of the other countries. But this is definitely a trend that governments are looking at. That's all I can say at this point, without intimate knowledge of what's going on in those governments.
I think if I can add to this, we work with many clients in Vietnam, Philippines, Thailand. I think we've come a long way in the last few years. I've been in the region for 12 years now, and I really believe that now regulators and governments have built the guardrails. They've built the roads. Now it's up to the financial institutions, fintechs, neobanks, technology players, consultants, advisors to accelerate adoption of cloud and innovation and adoption of digital assets. And there is, I mean, there are obviously open questions, but there is no fundamental blockers, I would say, in the majority of markets.
Kelvin, you want to add something?
Yeah, I'll just focus on purely on digital asset side with respect to regulations. So I would say at this point, juncture 2022, regulators globally have now taking a more friendly approach to digital assets in general, right? Now, one of the biggest challenges, so from a macro perspective, that's great. That's a great tailwind for the industries because it becomes legitimized and recognized under a certain regulatory framework. So that's good. That's a positive for the industry. Now, if you dig a little bit beneath that, the regulatory jurisdiction is still very fragmented at the country level. So, for example, Singapore MAS has been very receptive to and accommodating to emerging technologies such as digital assets. And that's why for a company like us, we're able to actually have a license that allows us to offer our services in a very regulatory way, right? So that's one great example. Some of the countries are absolutely following through. For example, in the Philippines now, there's a vast virtual asset service provider license. So there is a licensing framework in the Philippines right now for digital assets. There's a decree coming out in Indonesia regulating digital asset exchanges in custody, right? Australia came out with a consultative paper that want to put it into, in force by the end of this year. Korea's been on the forefront. Japan's been on the forefront. Europe in general, it's a little fragmented. Just there's a lot of countries out there. U.S. still, obviously the SEC. There are many different regulators trying to tackle how to regulate this space. So in short, this is one of the challenges. Is that every jurisdiction is a little bit different. They take a different approach. They can be very accommodative, maybe a little bit or not, at the country level. But again, I would say the trend line is towards regulating this asset class as a legitimate source of potential allocation for investors to put their assets into.
Sure. Thank you very much, Kelvin. I think there's one more question. Yeah.
Hi, I'm Parani from IBM Thailand's Communications, and this question is on behalf of Money and Banking magazine from Thailand. So to continue with the conversation on digital assets, we talk about the custodian service that bank will provide in the future, but what kind of other service that bank can offer in the future other than this? This is the first question for Kelvin.
Sure, thanks for that. So yeah, custody is really just the very first step. Right? You cannot offer Bitcoin services, NFT services, if you don't have a proven solution on that digital asset being secure and safe. So that's why really custody is a very fundamental layer, and that's partly what was missing back in 2017 when it was very retail driven, right? So fast forward 5 years later, I would say the custody piece has largely been solved, largely. So now we can then continue building in this ecosystem on top of this existing infrastructure, and we'll continue to build layer by layer. So for example, a lot of banks, what they want is usually on the private banking side, because there are private banking clients, family offices, ultra high net worth individuals, accredited investors, professional investors, right? They would, now at this point would like to, based on prudent asset allocation, want to have X percentage of their assets into digital assets. So that's a very obvious use case, right? The private bankers from major banks are getting calls from their respective clients to offer the services. So that's one way. Second way would be, think about, in the news, would say Goldman, which is public information, right? That they have an OTC desk for over-the-counter trading for digital asset. In fact, it was also public that they just basically originated a first Bitcoin-backed loan to, I believe it was Coinbase. Right, so you can see that the investment banking arm is now doing, offering these type of services. The trading arm is offering some type of OTC, using digital assets. The private banking arm is offering the services to their respective clients. And then even from the traditional security services side, what people are very interested in looking at is tokenization. Meaning, think about a big real estate, physical building. How can they, digitize that? Turn that into a token, fractionalize that, basically you turn an illiquid asset into a liquid one where you can basically offer pieces of this physical building to qualified investors. So just some high-level use cases, and obviously it will continue to branch out as the industry continues to grow.
Many permutations, cross-border payments, credit cards funded by digital assets, all the kinds of fragmentalization. So there is a lot of opportunity for creativity.
All right. Thank you very much for that. If you have questions, you can ask us later. Is there a follow-on, Parani? Okay, sure. Go ahead.
Okay, so this is from another angle, but related. So we talk about DeFi, smart contract, and everything is now on blockchain. So how this will shape the future of bank?
Is it directed
This is also
anyone?
for Kelvin.
Oh, okay.
Sure. And the question was how it might disturb the traditional banks. Is that the question?
Yeah, and the future of the service that.
Okay. Understood. Yeah, so I would say that, sure, it might disturb with respect to decentralized finance, DeFi, or smart contract, which is basically executable codes, right? A set of instructions that self-executes. So I would say that it doesn't necessarily have to disturb. I would say it could disturb the traditional banking model if they don't adapt, right? Because now if you focus on if you take a step back and think about what is blockchain technology, it's really about disintermediation. It's a cost-cutting mechanism, right? So basically, because everything is transparent on the blockchain, you can do it cheaper, faster. It's basically the more efficient way of conducting traditional business. So going in the future, as more and more companies adopt and integrate, offering these type of solutions, be it smart contract, be it using decentralized finance, the entities that don't support and embrace this, actually, even if they don't necessarily disrupt their traditional business, if their competitors are doing things more efficiently, the cost basis goes down, implying that the margin goes up. So even if you don't adapt to this technology, your competitors will, and if they will, then you'll be left behind. So even if so I think this is kind of the key thing that. There are many technology, and beyond just blockchain, right? There's AI, there's machine learning, right? There are many new technology to do things more quickly, more efficiently, faster, and cheaper. And therefore, the banks will need to continue to be on top of the latest trends in order to stay competitive.
And the good news is that most banks are embracing DeFi as well for many use cases. I don't think there is a question of yes or no. It's a question of which are the opportunities to optimize, collaborate better, reduce cost. So I think we're starting to see some real tangible use cases, even in collaboration between banks themselves, which hasn't been that common in the past, right? So I think again. I think we are at the verge of opening a number of new use cases that we haven't seen in the past.
All right. Thank you very much. There's one more session in the afternoon. You have more opportunities to ask questions. And again, I really want to thank our esteemed panelists. Really, thank you for taking the time to be with us. Juan, thanks for moderating the session. And we have lunch for the journalists, so we can proceed. Panelists as well, please join us for the lunch if you can.
My pleasure, and thank you, Calvin, Bambang, and Kuna. Really appreciate it.
Thank you.